The RBA have cut the cash rate to 0.5%. Let's have a look. Hello everyone, Florian Heise here. I hope you're having a good afternoon. I've got my stein of coffee and I thought I've been watching closely the website from the RBA. I've been refreshing it to see if they would go through with this cash rate cut. It was predicted from the last ASX website I looked at, pretty much 100% certainty, all these economic signs that we're seeing. In some ways I'm not surprised, in other ways I thought they may have tried to hold out a little bit longer, but they've done it, they've done a cut. What do you know? Let us know in the comments, guys. Are you surprised? Did you think they'd go through with it? Or did you think they'd wait for another month? And what do you think it'll do to consumer confidence, and do you think it's actually going to make an impact? So let's have a look. I've just finished another video on building approvals plunging down. I'll have to release that a bit later because I think this one needs to get out. So let's have a read through the statement by our governor, Philip Lowe, and the monetary policy decision. 0.5, wow, that's just crazy. At its meeting today, the board decided to lower the cash rate by 25 basis points to 0.5%. The board took this decision to support the economy as it responds to the global coronavirus or C virus outbreak. The C virus has clouded the near-term outlook for the global economy and means that global growth in the first half of 2020 will be lower than earlier expected. Prior to the outbreak, there were signs that the slowdown in the global economy that started in 2018 was coming to an end. It is too early to tell how persistent the effects of the C virus will be and at what point the global economy will return to an improving path. Policy measures have been announced in several countries, including China, which will help support growth. Inflation remains low almost everywhere, and unemployment rates are at multi-decade lows in many countries. Yes, I mean, Australia's got a low unemployment rate, but if you look at a different methodology and you look really at the underutilization rate, the underemployed and the unemployed, it's nearly a fifth of the workforce. Long-term government bond yields have fallen to record lows in many countries, including Australia. The Australian dollar has also depreciated further recently and is at its lowest level for many years. In most economies, including the United States, there is an expectation of further monetary stimulus over coming months. Financial markets have been volatile as market participants assess the risks associated with the virus. Australia's financial markets are operating effectively, and the bank will ensure the Australian financial system has sufficient liquidity. The virus outbreak overseas is having a significant effect on the Australian economy. Well, yes, that's because, well, we're pretty much pegged to the Chinese economy, guys. At present, particularly in the education and travel sectors. And education is a huge sector here in Australia. The uncertainty that it is creating is also likely to affect domestic spending. As a result, GDP growth in the March quarter is likely to be noticeably weaker than earlier expected. Given the evolving situation, it is difficult to predict how large and long-lasting the effect will be. Once the virus is contained, the Australian economy is expected to return to an improving trend. This outlook is supported by the low level of interest rates, high level of spending on infrastructure, the low exchange rate, a positive outlook for the resource sector, and expected recoveries in residential construction and household consumption. Okay, let's just look at these things. The low interest rate, okay, high levels of spending on infrastructure. Now, one consideration with that is, and positive outlook for the housing and recoveries in residential construction. All three of these are also linked to imports from China, which a large portion of our economy is, well, relying on, guys. And I will bring up one of my favorite websites here for you to all have a look. For those of you that aren't familiar, these are the exports of Australia. These are what we're importing. The lower the dollar gets, the more expensive all of these are for us to buy, everyone. We can scroll down here. Most of our destinations, or the destinations for most of our exports are to China. Their economy has significantly slowed. Their GDP growth predictions have been cut in half. Their PMIs for manufacturing, for services, they've plunged. But also the origin, nearly a quarter of what we're getting in to this country is coming from China. So if their whole economy slows down, that's going to have an impact on our ability to spend on infrastructure. It's going to have a big impact on the residential construction and resource sector. Resources are shipping out. If there's less demand for the raw resources in China, it's also going to have an impact. Examples are just looking at the crayfish industry in Western Australia, how vulnerable it is. So we'll have to see, guys. We'll have to watch. The Australian government has already also indicated that it will assist areas of the economy most affected by the virus. The unemployment rate increased in January to 5.3%. And this is the ABS statistics. If you look at Roy Morgan, they're suggesting it increased at 9.7, up from 8.6. They're seems to be double what the ABS is saying. And it's been around 5.25% since April last year. Wage growth remains subdued. Well, I don't know why they're even talking about wage growth anymore. They've got no chance of ever predicting it. And it's not expected to pick up for some time. A gradual lift in wages growth would be a welcome development and is needed for inflation to be sustainable within the 2 to 3% range. Yes, but why are wages going to go up? Why? If there's lots of people competing for work, if there's a large number of people, if we've got a 20% of our workforce that's either unemployed or underemployed, why would wages increase? The underutilization of a big chunk of the workforce needs to be addressed. More people, there needs to be demand for more workers for wages to go up. It's that simple. There are further signs of a pickup in established housing markets, with prices rising in most markets, in some cases quite strongly. Well, no, that depends. I mean, you can see here, this is the unit price growth. Look at that difference. Look at the difference in price growth. It's not universal. It's not everywhere. I think it's in the upper quartile. And housing construction, we're down 15.3%. Building approvals. Month on month. How's that good? If you look at it from a few years ago, some states, and I'll release this video later today, down like, a third. Where's the confidence? Where's the confidence? Where's it coming from? Mortgage loan commitments have also picked up, although demand for credit by investors remains subdued. Yes, and that's the big fall in building approvals. A majority of it was in apartments or non-private dwellings, non-houses. So what does that tell you about developers' confidence in that sector? Is it still easy money? Whack up an apartment, build it, flip it, run. It ain't. Credit conditions for small and medium-sized businesses remain tight. Mortgage rates are at record lows and there's strong competition for borrowers of high credit quality. The global outbreak of the virus is expected to delay progress in Australia towards full employment and inflation targets. Well, it's going to have a huge delay. The board therefore judged that it was appropriate to ease monetary policy further to provide additional support to employment and economic activity. It will continue to monitor developments closely and to assess the implications of the virus for the economy. The board is prepared to ease monetary policy further to support the economy. So if they go down to 0.25, that's when QE kicks in, guys. Quantitative easing, printing money. Where does that all go? That essentially it'll turn into a housing bubble or a stock market bubble. So I'm just going to jump to the Commonwealth Bank and we'll have a look to see if they've made any announcements about it here. Nope. Newsroom, have they said anything? Latest? Nope. Latest tweet today, we'll launch no. Well, let's have a look at ANZ. So do you think the big boys, the big four, Do you think they'll pass on the rates to us? You think people will get... Will they pass on the full rate? Will they pass on part of the rate? Maybe it's just been advertised. Media center. I mean, it's literally just come out. We've got a Westpac. Well, let us know in the comments, guys, in the future, when you watch this, if your banks have passed on the rates. If you do you think it will? And more importantly, if you have a mortgage, if you're like me and you've got a mortgage, are you going to take that extra money and spend it, or are you going to attack that that ball and chain that ties you to the bank that little bit faster? Let me know your thoughts and opinions in the comments below, guys. Thank you all for watching. Please like, share, and subscribe to the channel. If you're a fan and you want to help us, there are a few ways you can. You can share the content, get the videos out there, help the channel grow. You can support us by joining the channel, becoming a member here on YouTube, or joining us on Patreon. You can use our affiliate links for Amazon or eBay for your consumer purchases. We receive an advertiser's commission that doesn't cost you anything. We also have affiliate links with Independent Reserve and Kucoin for all the crypto traders out there. You can buy our merch from the HeiseSays website. And finally, we have PayPal if you want to support us directly. Thanks to everyone who's helping the channel. Really appreciate it. And let me know what you think about this cash rate cut. Take care.